Welcome back. Hope you're having a good morning. Well, we've listed down all the top stocks for you. So let's get some fundamental analysis going. We have Dipan Mehta, Director, Elixir Equities, who joins us on the show. Hi, Dipan. Good morning. Well, let's talk about the top story then. The deal between Zomato as well as Paytm. How do you read this, and which one would you be more bullish on from these levels?
Good morning, Nigel, and thank you for having me on your show. I think it's positive for both the companies. And Paytm, of course, I think improve the sentiment over there because that cash can be utilized better to grow the existing businesses where there are certain challenges, regulatory and competition-wise as well. And in terms of Zomato, it definitely opens up one more avenue to grow the business and to grow the company as a whole. But some amount of resources of top management and the company will go into developing the district brand and the app. In the past, Zomato has been very successful in creating such B2C businesses. Let's see how this shapes up. But definitely there is some synergy between existing businesses and the new business that they are attempting to scale up because of the number of subscribers and users which they have. So I think it's positive for both businesses. It's a right fit. It's not going to make an immediate difference to Zomato in the near term because it's a smaller business. But look, it just opens up one more avenue for growth going forward.
Fair enough. I was just looking at the target prices, and I think Jefferies is one of the biggest bulls. Now their target price after this is it's 335. So still a fair amount of upside from where the stock is. Dipan, hi, good morning. Good to have you on. It's block trade season all over again, and you're seeing so much of action where promoters are selling. Yesterday we saw the deal with Cyient, between Cyient and Cyient DLM. Anything that stands out? I mean, any specific trend or any stock that you'd want to call out? For instance, the Cyient transaction itself, and what do you make of it?
Yeah, so no, I mean, these things are very unpredictable. But I'm just scratching my head to figure out where is all this liquidity coming into the market to absorb these kind of block deals. So we have block deals on one side, and we have got these IPOs on the other side. The IPOs are getting listed also at fancy premium. And even every single correction in the secondary market also is being bought into. So it's just this liquidity, wave which is coming is showing no end at all. In fact, seems to be growing also at this point of time. And from what I gather from the investment banking and the stockbroking circles, is that whenever they are trying to do such a block deal, the demand far outweighs the supply, and the discounts also are significantly lower. So it's we are just waiting and watching how this thing actually is playing out, and as I said, scratching our head as to how longer and how much more the liquidity is going to come into the market.
Well, it's coming, so it's coming, and it's coming in as like a flood, right? And it's coming at a time when you've got one constituent, FIIs, which are still selling. I mean, they're still sitting out, and markets are where they are. So it's quite incredible what we're seeing. Dipan, hi, good morning. Just a few names I want to ask you about. The life insurers are seeing steady but measured moves, but they're moving higher, slowly but steadily. We've got a discussion with a Bernstein analyst at 9 o'clock, so you may want to listen in later. But if you own any there, you had names like Century Textiles, which moved up very sharply. PNB Housing, I don't know if you own it or you have a view. Again, there was a clean-out trade. Someone was comparing this one to, other entities where there have been clean-out trades. Large investors have gotten out, the stock's gotten re-rated. I'm not sure if you have a view here. And Edelweiss is into 3 digits now. I don't know if you picked up anything here.
Yeah, Prashant, good morning. I think in terms of insurance companies, we are still quite optimistic on LIC. The stock market, rise in stock market prices certainly will increase the enterprise value of the company. And by and large, they're able to grow the business despite so much of competition. But of course, the best in class is HDFC Life, but look, it's really expensive as well. But insurance is a good, stable business, nice, slow compounder. And if you want to get a slightly defensive tint to your portfolio, then insurance certainly fits that criteria. Century Textiles, more of a real estate play, and the way real estate prices have gone up, the breakup value or the net asset value of Century, I think is significantly higher. Analysts may be underestimating what sales realization they can get from their existing real estate projects. And apart from that, I don't know which is the third company which you spoke about.
PNB Housing.
PNB Housing, yeah. See, I think they have largely cleaned up their books. The NPA levels certainly have come down. But look, there's a lot of competition within the housing finance industry. No doubt volumes are higher because of higher real estate sales. But it's been a cheap stock for many years or so. And I don't see any reason why it should get re-rated higher. And there's so much of over ownership when it comes to NBFCs and banks that I think investors should look for new ideas or new investment themes rather than just the banks and BFCs, which seem to be overowned across all portfolios.
Oh, but since you're just talking about banks, appears the overweight stance is continuing. I just want to ask you about two relative underperformers, RBL Bank as well as Bandhan Bank. Both of them were up 3.5 to 4.5% in yesterday's trade. Any view out there? Because from the peak, the stocks are still considerable distance away.
Yeah, that's right, Nigel. I think both these banks, they destroyed a lot of value. They held a lot of promise at one point of time. They were, largely promoted and grew with very iconic CEOs, but then the market was let down by all the kind of NPAs which crept up. And end of the day, their valuation multiples also significantly contracted and a lot of value was destroyed. But I think under new management, we are seeing a quiet turnaround. All the NPAs seem to be more or less provided for. And I think they're raising good amount of, first of all, they have good capital adequacy, so they can grow the credit book also steadily. And the way the valuations were a significant discount to their peer group, there is certainly a case for the P's or the price to book to be re-rated, and that is what is happening. I think going forward, their earnings will be more or less in line with other private sector banks, and that certainly is positive. So you could expect some more outperformance from both these companies because they are kind of turnaround candidates.
Okay. Just checking, Dipan, in case you've had a look at IRDA of late, it's in news because they are looking to raise some money. I mean, we don't know what the government's view is going to be on divestment, but in the meantime, a company like IRDA is looking to raise some money. They may do a QIP or maybe an OFS. Any sense on the stock?
Yeah, it's a good story, but when you look at the valuations and compare to other NBFCs, no doubt it has a niche. It is into renewable energy, but it's not that other NBFCs or other banks cannot finance renewable projects. And right now, renewables are in focus. They are kind of, got the fancy of the street. So from that point of view, IRDA is getting a very rich price to book, price to earnings multiple. It's run up also significantly. So I'm not sure I want to participate or enter at these levels. I think existing shareholders, it's an easy decision. You remain invested because it is quite a favored stock. Sentiment is at all-time high. Floating stock is low. And such, fundraisers certainly will incrementally improve the earnings per share.
Vedanta, do you have a view, Dipan? As an upgrade also this morning.
No, I think it's a good story. And there is a value unlocking opportunity when all the businesses are split. And with every passing week, month, or quarter, the kind of risk factor with debt at the holding company is gradually reducing. First of all, this OFS was there in Hindustan Zinc, and when they split the companies, I'm sure one or two may be sold off 100%, and that will go towards reducing the debt. It's just that I think the commodity cycle is turning negative, and it's a cyclical business. So at some point of time, when you're at the bottom of the cycle, when it comes to commodities, especially copper, aluminium, that's a good entry point, and zinc as well. That's a good entry point for Vedanta. I wouldn't want to buy at these levels because I expect in 2-3 quarters, you may see disappointing or lower year-on-year profits as well. So while it's a good story and there's some value unlocking opportunity, I think I just want to wait and watch.
Dipan, any thoughts on this one, Bajaj specifically?
I think incrementally positive news and certainly will improve the sentiment. And look, the markets are such, just now, Prashant, that any positive news is having an extended and exaggerated move in the stock price. So it's going to be a great trading opportunity in Bajaj Auto. But look, I think auto industry certainly is slowing down. The monthly numbers are showing it. And the entire benefit of higher realizations, that also is now kind of stabilizing, or I would say stagnating. I'd be a bit cautious in the auto industry. You still want to play it. I think Hero MotoCorp is a good play because of the rural kind of exposure which they have. And monsoons are exceptionally good. The wedding season also will pick up. So you could expect some outperformance there. And it's, I think, among the cheaper of the auto two-wheeler companies or so. But on the whole, as a sector, I want to be neutral to slightly cautious.
No Ola Electric, Dipan? So sticking with Hero Moto, the tried and tested.
No, I think from a risk return profile, I would say Hero MotoCorp, even a Bajaj, Eicher are far better than Ola Electric. Look, it's really, really expensive at these levels. But, all the floating stock has got absorbed. There's a lot of speculative and trading activity in it. A lot of BTST players also have kind of climbed onto this bandwagon. Valuations just do not make sense. It's not like a platform company like Zomato or Paytm, which has great operating leverages once the revenues grow. End of the day, this company has got a high amount of variable costs as well. There are execution risks, there are consumer acceptance risks. So just too many risk factors for us to give this kind of valuation.
No, I take your point, and I think that's a really important distinction to make, what you just highlighted, that this is not a Zomato, this is not a platform company, it's a very different business. And just because Zomato had a certain trajectory, to extrapolate and say all new age companies will have the same, I think that would be not the right path perhaps for investors to take. So thank you for placing that on the table as well.